Good day Forex trader. Your USD Forex signal, range-bound to persist for now. The Euro USD will likely remain in this range as investors reflect on geopolitics and the American consumer confidence data. Bearish view. Sell the Euro USD pair and set a take profit at 1.0930. Add a stop loss at 1.1050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1035 and a take profit at 1.1100. Add a stop loss at 1.0950. The Euro USD pair moved sideways as investors watched the upcoming negotiations on Ukraine in Turkey and the performance of the bond market. It is trading at 1.1100, where it has been in the past few days. Turkey and Russia negotiations. The Euro USD went nowhere as investors focused on the fresh round of talks that is set to take place in Turkey on Tuesday. These talks come at a time when Russia has said that it will shift its focus to eastern Ukraine. Also, the Ukrainian president said that he will be open to a deal on neutrality. Still, it is early to determine whether the two sides will reach an agreement. The Euro USD also was in a tight range as investors watched the performance of the American bond market. The closely watched yield curve inverted on Monday in a sign that investors expect the American economy to go through a recession. The performance of the bond market is likely because of the Federal Reserve, which has signaled that it will deliver more rate hikes this year. Indeed, the Fed chair has hinted that the bank will deliver several 0.5% rate hikes this year. The next key economic number will be the American consumer confidence data scheduled for Tuesday. This is important data because of the importance of American consumers on the American economy. Consumer spending is the biggest part of the country's GDP. Analysts expect that American consumer confidence declined sharply in March as inflation surged. Data published this month revealed that the country's inflation rose to the highest level in over 4 decades in February. And the situation will get worse as the cost of energy and fertilizer jumps. The U.S. will also publish the latest JOLTS job openings numbers. Euro USD forecast. The Euro USD pair remained in a tight range. On the 4-hour chart, the pair has moved slightly above the 23.6% Fibonacci retracement level. It has also formed a small descending channel that is shown in black. Further, the pair is trading at the same level as the 25-day and 50-day moving averages while it has formed what looks like a head and shoulders pattern. Therefore, the Euro USD will likely remain in this range as investors reflect on geopolitics and the American consumer confidence data. Gbp Usd Forex signal, pound sells off after Bailey's warning. The pair will likely keep falling as bears target the next key support level to watch will be at 1.300. Bearish view. Sell the Gbp Usd pair and set a take profit at 1.300. Add a stop loss at 1.3150. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3125 and add a take profit at 1.3200. Add a stop loss at 1.3070. The Gbp Usd pair retreated sharply during the American and Asian sessions as investors reacted to a major warning about the UK and European economies. It declined to a low of 1.3072, which was the lowest level since March 16 this year. UK economy at risk. The UK economy is facing significant challenges because of the ongoing crisis in Ukraine, according to the latest assessment by Andrew Bailey. Speaking at Brussels, the head of the Bank of England, BO, said that the living standards of most Britons will decline substantially because of the rising energy crisis. He said that the situation will be worse than in the 1970s during the oil embargo. Oil and gas prices have surged in the past few weeks and analysts believe that the situation could worsen in the coming months. For example, analysts at Goldman Sachs believe that oil prices will rise to above $150 per barrel this year. Other analysts see prices jumping to above $200, the highest level on record. Bailey's speech reflected the difficult situation it is currently in. To deal with the rising inflation, the bank has delivered 3 rate hikes. But it has also softened its tone on higher rates to reflect the uncertain outlook. He insisted that it was necessary to tighten conditions even as the economic growth slowed. On Friday, data by the Office of National Statistics showed that retail sales declined unexpectedly in February. The headline sales fell by 0.3% as inflation jumped. The GBP USD pair also declined as American bond yields cooled down in the evening session. The 10-year and 30-year yields declined a few hours after they inverted. This was the first inversion of the yield curve in years and is a sign that investors expect a recession in the coming months. Gbp Usd Forecast. The Gbp USD pair has been under stiff pressure in the past few days as risks to the UK economy remain. The pair moved below the 23.6% Fibonacci retracement level. It also declined below the 25-day and 50-day moving averages and the important support level at 1.3200, which was the highest point on March 10. The price has also formed a small head and shoulders pattern, which is a bearish sign while volume has been elevated. Therefore, the pair will likely keep falling as bears target the next key support level to watch will be at 1.300. USD Jpy Forex signal, short-term peak likely at 125. Very high volatility hints that a bullish climax has occurred. Today's USD Jpy signals. Risk 0.75%. Trades must be taken before 5 p.m. Tokyo time Wednesday. Short trade idea. Go short following a bullish price action reversal on the H1 time frame immediately upon the next touch of 125.00. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 30 pips in profit. Remove 50% of the position as profit when the price reaches 30 pips in profit and leave the remainder of the position to ride. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 123.11 or 122.23. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 30 pips in profit. Remove 50% of the position as profit when the price reaches 30 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. USD Jpy Analysis. I wrote last Thursday that the price was now trading in blue sky with no obvious resistance level overhead to stop it until 123.67. I was looking for a long trade from a retracement to 120.50 or 120.00. This was a good call overall as the price continued to advance strongly last Thursday, although unfortunately there were no such retracements to give a long trade entry. However, I was correct about the direction. The price of this currency pair and all the yen crosses continued to rise strongly over recent days. The fundamental driver behind the heavy weakness in the yen over recent weeks has been the Bank of Japan's standout dovish monetary policy, which in turn has been driven by Japanese inflation rates remaining considerably lower than the bank's 2% target, and this at a time when almost all other major economies are dealing with the problem of strongly rising inflation and tightening monetary policy accordingly. This rise was given an even stronger boost during Monday's Tokyo session when the Bank of Japan announced that it would buy unlimited amounts of bonds at a fixed price, leading traders to dump the yen even more heavily. The price rose quickly by almost 3 times typical recent daily volatility as measured by the average true range, ATR, indicator, peaking just above the big psychological round number at 125 before retreating by more than a day's average range. This seeming volatility climax suggests that we will not see new highs above 125 today, and probably not for a few days more either. The price will be likely to begin to consolidate by trading in wide swings, giving opportunities to both long and short traders. As volatility remains high, being nimble and monitoring trades on short time frames will probably be key to trading success here today. There are still key support levels below which can be expected to be useful as long trade entry points, but for short trades, there are no key resistance levels below 125, so you will likely need to find price action reversals on the H1 or H30 chart to find good short entry points.